Today's December 19th, and that means that it's time to reevaluate our seasonal products. Should we reprice them, lower the price, or should we hold off and see what happens in the upcoming weeks? So, I have three different examples. I'm going to take you into Keepa and I'm going to break it down for you. And by the way, just before we even get started, there's really two questions we need to answer in order to see what we should do. Does this product continuously sell after the season? And does it sell for a price point that makes sense for me to hold on to it? So we're going to answer those two questions. I'm going to share with you exactly how I break down these Keepa charts. Two of them are going to be ones that I'm going to say I would lower the price. And then the last one is going to be one that I would stick it out. So we're going to see a nice spectrum here. So let's hop into the first one. So here we are in Keepa. Keepa is a 3-month snapshot. And for anybody not familiar, let me give you a real quick rundown of what we're looking at. In the top chart, this pink line, that's the buy box, basically what the items are selling for at any given time. The green line is the sales rank. Sales rank in Amazon world continuously changes. The higher the number, the worse selling product. The lower the number, the faster it's selling. And then this bottom chart, this blue line is the amount of sellers. The reason I like to really see that is supply and demand. Typically, the more sellers or on the upward trend, the price is going to go down and vice versa. And by the way, these are seasonal items that I sell, so I'm not going to show you exactly what they are. This first one is a seasonal peppermint grocery item. All right, so let's break it down. Looking at it here, you can see I'm going to highlight it. It was out of stock basically all the way up until this point. The first day it was available again this year was November 5th. When you hover over any point, by the way, you can see all the information pointed out here. Okay. And that makes sense. It's a seasonal grocery item, right? And those people that were the first ones to market were able to charge a premium. So the first people in got $27.98. Someone even got $33.96. And then as the amount of sellers caught up, the price typically goes down. And that's what happened. So it went all the way from up there to about a steady price here. Okay. $11.39. And basically from then, which was around mid-November, the peak since then has been 15, and current day it's $14.99. So between $11 and $15 for the last month. Okay. So let's just say that you were looking at this product. It's a normal product, not seasonal. I would look at it and I would say, okay, the amount of sellers is starting to decrease. I like that. That typically means I can increase the price. I would also look at this and say, I'm probably never going to be able to get $33 because the only person that got that is when they were first to market. So I would get between $11 and $15, as I mentioned. However, being that this is a seasonal product, the best way that you can understand what's going to happen in the future is actually going back a year to see the full cycle of the seasonality. Okay. And so what we do is in the bottom right corner, span it out. You can click on year. And now we can look back to a year. Okay. So all the way left is a year ago today, essentially. All right. And so now I'm going to look at the price here. Okay. Last year, it was around 1388 and then steady. And then it started to go down January 7th. It started to dip into the $11 range. And it's a very steady and small decrease from there. Okay. Also, let's look at the green line just visually. The amount of ups and downs, the sales rank line, the quicker they go up and down, you typically assume that with more and frequent sales. Okay. The more spaced out they are, like I'll highlight it here. In that range, there was much, much fewer sales. You can tell because of the spacing of the lines. Okay. So what I'm looking at visually is the amount of sales start to slow down a little bit in this area. Okay. But they still do occur all the way really until April. However, the price never goes higher than what it currently is now. The peak was like $15 to $11 range, even if you look in the bottom chart, when the number of sellers steadily decreases. Sometimes when the amount of sellers decreases, typically the price goes up, and then it might be worth waiting for it if the demand is still there. But for this particular product, the price never goes higher, even when supply goes down. The amount of sales start to slow down quite a bit in the upcoming months. And since I mainly don't think I'll be able to get more money than I'm selling it for now, I'm going to drop my price to make sure that it sells now rather than later because there's no upside of later based on what I'm seeing. Get it off of my plate, get the money back, and keep it moving. So that's example one. Moving on, example two. This is also a seasonal grocery item. It's like a decorate a cookie kit, like a gingerbread cookie kit type of thing. And this chart's also a little unique in that there's no sales rank. I love products with no sales rank because typically that means less competition as more people aren't as well versed. But we could still break this down. So again, like the last one, no one was selling it for quite some time leading up until the first day it was back was looks like November 11th, and someone got it for $29.95, and then from there the price continued to go down and leveled off here for 1944 and was there for a couple weeks, and then it dropped recently to more of the $13-14 range. Even with the amount of sellers being pretty consistent, I tend to think a lot of people probably say, oh, we're coming up to Christmas, this isn't going to sell afterwards, whether they looked at the data or not. And so if I were to just look at this here, I would say, okay, the amount of sellers is not dropping, it's been consistent. The price has gone down and it's pretty low right now. Do I have reason to think that I'm going to get a better price than what it is now? Just looking at this, I don't know that I would necessarily think that. I would think maybe I can get 19 at best. But again, what we're going to do is span out a year. So just visually, a year ago, the sales rank was caught. You could see that the green line is there. It looks like, there's some good action here, and then it starts to really space out again, as I pointed out in the last one, meaning that sales happen much, much more infrequently. Okay. So also going back a year, last year it was selling around 20, and then the price very steadily continued to go down all the way back down to even $8.75. Also, the amount of sellers was continuing to decrease. So again, if sometimes the sellers go down, but there's high demand, that's when you can get a premium because of supply and demand. But the fact that the price continues to go down with the number of sellers and the green line, the sales rank line, shows me that sales continue to slow down. In my head, I'm also offloading this product, get it off of my plate. And actually, I want to do it sooner than later, but because to me, it looks like come mid-January, this product is hardly selling at all. So I want to get rid of it, wash my hands, keep it moving. Yes, last year at this time, it was selling higher than what it currently is. No 2 years are going to be identical, especially in the COVID era where supply chain issues and things like that. So based on today and last year, even if I wanted that best case scenario, $20, I still think the sales of it, like people buying it, is going to start decreasing pretty soon. So I'm going to get rid of this. Then lastly, we come to one. Now this is I guess you can call it a seasonal product. It's a holiday scented candle pack. Okay. And so same thing here. No one really had it in stock for this whole time until right here, first people in November 4th got $41 and change for it. Then it dropped down to $28.99 and then steadily decreased until where we are today, around 19 and change. And it's been 19 and change for 3 weeks now. The amount of sellers has steadily decreased, which makes sense. The supply available, I know, has gone down. But now again, let's span it out to a year. And this one's going to be a little different. So looking at this one, what you'll notice is a couple things on the eye test. First off, the buy box doesn't just steadily go down. It actually goes up here. And even in January, people are getting 25 and change for it. And then here, still in January, someone gets 40 for it. Somebody gets 30 for it and then 40 for it. And so people are not only getting that, but it's still selling pretty good. I mean, look at the green line. It's not drastically spaced out like the previous examples, right? The amount of sellers here slowly goes down, nothing crazy, but the price continues to go up, not continues to go up, but does have fluctuation of going up. And then it actually sells pretty consistently all year for $25.99. So taking all this into consideration, I might not drop my price and have to feel like I have to sell it for $19. It's clear to me that this product sells and it sells well for months to come. And it seems like when more and more sellers run out of this, and I know it's not going to be available to buy much longer. So once they're out of inventory, that's it. People actually get a nice premium all the way up to $40 sometimes. So for this product, I am not going to feel pressured to lower the price depending on how many you have in stock. Maybe one or two. When you have less, I like to hold on longer because it's not tying as much capital on one SKU. So I would certainly consider holding on to a few of these and seeing if I can't get 25, 30, even $40 for these in the near future. And so those are the three examples I wanted to share with you. Really want to drive home the point is this. It's not about emotion, it's not about what you think's logical. It always comes down to the data. And when it's seasonal products, in order to really capture the data, you have to go into Keepa and span out a year. And you can even go multiple years if this product's been around for that long so that you can really understand what happens for these 2 to 3 months of the year with that product. There's a saying, first in and last out. That's usually when you can charge a premium. Now, sometimes it doesn't pay to wait until to be last out to charge that premium. Sometimes it does. When you're first in, it almost always pays to try to get premium price, but it's hard to time the market perfectly. I would say if you have products like these, it might not be a bad idea to keep notes of these so that you know when they're going to come back in stock next year and try to be that first one. And so that's all I have for you guys. Always want to say with repricing, it's data based. Don't just drop your price because other people are doing it. And scanning back a year is huge, especially for seasonal products. I appreciate you guys being here. I'm Jonathan, Duke Does Amazon. We're on Instagram and Spotify as well. Duke Does Amazon, Duke Does Amazon podcast. And below, I recently added some discount codes to some softwares and tools that I use that are linked below in case you're interested in them. I only put things that I use and vouch for myself. Have a great day, and I will talk to you guys soon. Take care.